Hey traders, Raghee here. We're taking a look at the radar screen right now, and we can see that the US dollar is back pushing the 79.90 level, and that, while it is certainly helpful to our euro shorts, is not necessary. We are not basing any of our positions primarily on the dollar as a driver, although it's not surprising to see post-Yellen the dollar continues to bounce off that daily triple bottom that we talked about earlier last week. The Dow futures are up triple digits. Fantastic. You can see futures are up 105 points. The Dow Industrial Average is up 162, which bodes fantastically well for our yen shorts. So those positions we have short in the yen by way of the Aussie yen and the Kiwi yen are firing away. The laggards there really are the calm dolls in many ways. You know, earlier on, the Aussie was actually gaining footing, but that New Zealand dollar, the Kiwi, as a strength story, was still kind of stuck in the muck from last night's CPI miss. And I talked about that in the premium video, how to set that up. And actually, those positions have triggered not only our entries, but they've bounced back for us really, really nicely. And we'll talk more about that tonight in the premium video. So what are we looking at right now? What is my current book? And what ultimately can we take away from this 24 hours that saw, in some ways, a lot of discomfort as we got many of our fills in the Aussie Loonie, Aussie Yen, Euro Aussie, Euro Kiwi, Pound Kiwi, Kiwi Yen, and Kiwi US. You'll notice that there's two major common denominators, and that's my reliance on Aussie strength and my reliance on Kiwi strength. Yesterday's CPI miss was a heck of a gift. Okay, when you think about the fact that that move to the downside in this pair on the New Zealand dollar weakness allowed us to get those corrective entries, whether you're looking at the New Zealand dollar Japanese yen or whether you're looking at the New Zealand dollar US dollar, both those moves to the downside gave us that catch the wick opportunity to grab those ultimately trend following, uptrend following fills. So I'm very happy about those fills. One of the trickier fills and one of the trades that we're going to manage a little bit more aggressively is that pound versus Kiwi. So we have a pound versus Kiwi fade here. I'm going to give it a little bit of time. I think it's a good fill that we've got. We're really fading this in many ways because I don't know that I would view this trade as really a great trend any longer, since we have pierced the 34 EMA wave, pierced that 34 period exponential moving average on the high. But I tell you what, one of the things that could be very interesting, if we can continue to remain below the 195 handle and sink a little bit lower, is I think ultimately we could get the dreaded death cross. I'm not basing the trade on it, but let's think about the psychology and the discussion that will emerge from this 50 period simple moving average crossing down through this 200. Now I want to mention TradeStation, what I'm looking at right now, is a 5 candle daily time frame. If you're on the MT4 platform, which typically gives you a 6 candle week versus a 5 candle platform week, you know, if you're a Forex trader, you got to think about that. If you haven't ever done this, take a look at your platform, find out if you have a Sunday candle. Some platforms have Sunday candles, some do not. Make sure you know if you're looking at a 6 or 5 candle week. This is a 5 candle week. A 6 candle week death cross has already occurred. So this would basically be another group of market participants watching the Forex market through a 5 candle week, seeing the 50 dive through the 200, which could again bring another wave of bearishness to this market. This market that I think is more bearish than it is bullish. The pound got a good boost from some decent, actually some pretty darn good jobs data. The unemployment number actually went down 0.3. So that was a fairly significant move, where we went down to a 6.9% on that unemployment from 7.2. So that was pretty significant. Moving forward from here, what am I going to need? If I know the pound's going to be supported, I actually really need this New Zealand dollar to do what it's been doing for us, which has been actually strengthening. And that brings me to the New Zealand dollar and its relationship with the euro. Another trade, another short, another great fill. And what we're doing here is waiting for that heaviness, waiting for the New Zealand dollar strength and some euro weakness. Now the euro weakness is coming by way with a little help from our dollar. So I am rooting for a US dollar above the 80 level, despite the fact that I do have a New Zealand dollar US dollar long position. I am rooting for that because that's going to weaken the euro and help, and just to help that euro Aussie, euro Kiwi. Okay, so in the positions that I have, you know, and one of the interesting things that I'm going to leave you with as we complete our look at my current book is the fact that I've rolled out of a lot of positions this month. And the positions that I'm building now are really primarily on that Aussie and Kiwi in terms of expecting more strength from what has been a fairly more hawkish sounding RBA and certainly much more hawkish RBNZ. So there's some other stories that I'd like to see added to this that would be possibly in the coming weeks, pound sterling strength, and possibly in the coming weeks, depending upon the environment in terms of the risk environment of the equities, I'd like to see some more yen weakness, but that is really going to be dependent on continued strength in the Nikkei and in the Dow. So we're not even done building these positions. I'd like to continue to manage them. I like the foothold we have now, and now we're going to talk more about those daily price movement ranges and how we can manage these positions for what could be some really nice moves. Okay, so in the meanwhile, those are the positions we're rolling out of, that we've rolled in. So I wanted to give you an idea of where we are right now, because we are in a very early stage of building that next wave of positions that will carry us through possibly the next few weeks, if not the next few months. And I really wanted to share this video with everybody because we have closed some long time positions, and I really want people to be aware that there is a significant shift in those individual currency stories. Speaking of which, check out the Forex in Focus video that I have included in the email that you got this video on. Check that out. It talks about dissecting pairs. It talks about individual currency stories and gives you an idea of the concept behind them. My advanced trend trading mentorees, you got a huge webinar this morning on that topic. In fact, my 4-step process for advanced trend trading, and I know a lot of you, minds were blown, you know, so that was great. I loved it. Great conversation. My advanced trend trading mentorees, that video will be updated in the members area for those of you that have signed up for that program. In the meanwhile, if you have any questions, please feel free simply to reply back to this email that you got this video on, and I'll see you in the next update.